Welcome to Hitting the Bid, the place for retail traders by a retail trader. I'm your host, Jeff, and I'm here to break down market moves, share lessons from my own trading journey, and help you navigate the ups and downs of life in the markets. Whether you're just getting started or have been trading for years, this show is here to help you stay sharp, stay disciplined, and most importantly, stay in the game. Today is Friday, May 16th. Let's get into it. The S&P 500, just for a little bit of market overview here. So SPY is up almost $2 at 0.35% change on the day. The Nasdaq through QQQ up 80 cents. That's 0.15% today. And the Russell 2000 IWM up $1.10, up about 0.5% on the day. VIX here, looking at it here on the daily over the year, continuing to get crushed this month down to 717. That's 66 cents down on the day. Now VIX futures, the tradable instrument here, also down about 1%, down 21 cents to 1919. Going through a little bit more here, Bitcoin, that is at 104,000. It has seen a little bit of strength since starting last week. Seems to have lost a little bit of momentum, kind of consolidating here over the last 5 or 6 days. Now just going through a little bit more, we got bonds right here. This is the bond futures slash ZB. Up 12 ticks on the day. And here is the 10-year note futures. We'll get back at this a little bit later. That's up about 4 ticks. Nothing too notable as far as the currencies. One thing I did kind of want to point out here is a little bit of recent strength in the Japanese yen. It is down on the day, but you can see here it's gone from almost about 675 here to 687, so decent move here over the last 3-4 days or so. And metals, all down about 1%. Really kind of getting crushed here over the last few days. You can see some pretty big candles. This is gold. These are gold futures. They are down about $34 on the day, a little over 1%. And finally, we have crude oil. Here's crude oil futures up 83 cents on the day, a little bit over a 1% move. But if you remember, I did enter in a trade this week. I'll go ahead and put on the drawings I had here. From last week, we talked about this range right here and how we were mostly in the middle of the range when I entered in the trade last Friday. We did continue to go higher here through most of the week. Now it looks like on Wednesday, we saw a little bit of weakness that continued into yesterday, and today we're up a little bit, but it does look like we're seeing a little bit of the prices here rolling over, hopefully back to the middle of the range since that's where I entered the trade. Right now I just checked, up about 10% of the initial credit. So just about 20 bucks in a week. Volatility is down a little bit. For this trade, I'm really just looking for time to pass and volatility to maybe decrease a little bit over time, since that was a neutral option selling trade. It was an iron condor that I had entered in on Friday. Now for this week, if you go back to the newsletter here that I put out on Tuesday, I was looking at a trade here in the 10-year Treasury note futures slash ZN. So back in the June contract. Now I drew some lines here. This is the daily chart for a year. I drew a couple of lines. This is the range top to bottom right here. And then more recently, this is where much of the price action seems to have kind of developed in this range right here. So going from almost 113 to about 109. So that's where much of the trading you can see has developed over the course of this past year. Now, I mentioned in the newsletter that I was looking for a couple of things. I was looking for a key level to hold. So this 109 to 110, I was looking for this area to hold right here. And then I was also looking for some positive momentum because I wanted to look long since we're towards the bottom of this trading range right here. I was looking for a long trade, looking for it to at least move back up to the 112 area. Now, one of the things that I pointed out and that I wanted to find and look out for was a close above the prior bar in order to enter the trade. So you can see yesterday we had a lot of strength, but we didn't quite close above Wednesday's bar here. So here's the close from yesterday at about 110 and 8 ticks. And the high from Wednesday was 110 and 9 ticks. So didn't quite close above it. And today we're seeing, it got higher today. We got a high of 110 and 21 ticks, but we're seeing some kind of selling here through the day. And right now we're below yesterday's high. So I do hate to disappoint, but I'm not actually going to make the trade today because the price action did not meet the minimum criteria I set forth when I was initially reviewing for a trade. Now, even though I didn't enter anything here, I still thought it was important to bring up. In one of the newsletters, I mentioned not trading just a trade. Creating a trading strategy and framework, it's important because it puts forth rules that you follow. And while you can sometimes stray from those rules, that really shouldn't be very common. It's an easy way to get into trades that eventually lead to big losses. So for today, I'm just going to kind of sit tight. I'm going to see how the price action develops through the rest of the day into next week, and maybe I'll look at it again next week. But really, I'm just not going to enter anything here since it's not developing the way I wanted it to. But that's all I had for today, folks. I hate to disappoint, but I'm just going to try to stay disciplined. Thanks for tuning in to Hitting the Bid this week. If you enjoyed today's video, don't forget to subscribe, leave a review, and share it with a fellow trader. You can also sign up for my weekly newsletter at news.hittingthebid.com, where I share market insights, interesting tickers, and practical strategies, sorry about that, to help you grow as a retail trader. Until next time, trade small, trade smart, and keep hitting the bid.